Oh man, it's 5 o'clock somewhere. What's up, y'all? This is Hey Chuck.
Man, oh, Manischewitz. What's going on,
I'm
pal?
telling you, Manischewitz. Hey, I need that logo on my TV. Come on.
You like that?
Oh man, I'm gonna have to do that. I,
I thought
I,
I'd go with something a little different today.
I love that. I'm gonna get some logos and I'm gonna put the stocks on the rocks back there. It's gonna be awesome. We're gonna be twinsies.
Love it.
I like it.
Love
What's
it.
going on, everybody? This is Corey here and Chuck. Nice to see you guys here. Got a few people coming in from the waiting room, and we'll let them come in as they
Ready,
trickle in.
ready to do the deal.
It is. This is
Thomasine
our
asked if we had a video last week, a class last week. We did have a class last week, right?
well, not stocks on the rocks.
Oh,
So
yeah. The
we had
11
all
o'clock
kinds
class.
of trading rooms. We had, and I'm assuming Thomasina, you're talking about stocks on the rocks, but yeah, last Thursday we do stocks on the rocks. Just a heads up, which is our just open Q&A, happy hour, pour a cocktail if you'd like. Um, then it's every other Thursday. Now, if you're talking about the 11 a.m. one, we definitely had one. Yeah, I haven't missed one in a long time, and
You taught it. You
I
taught it.
I taught it. I was there.
Hey,
Now, 11 a.m. Would be Eastern time, not Pacific time or anything like that. So 11 a.m. Eastern,
right.
8 a.m. Pacific. So it was 10 a.m. your time. There you go. Yeah, yeah, it was 10 a.m. your time. So that should have been it. Yeah, I mean the recording is up, so if you want to go back and watch the recording from that session, it's still there. I post the recordings. Do you know where to find the recordings, Tomasino? That's probably a good thing to make sure you know what to do.
You should
Nope.
highlight
Okay.
that real quick.
Ooh, let me highlight that real quick. So let me go over into. Well, first I got to log in to my own website, Chuck.
Oh, man.
Why not? Why not? All right. So let me go ahead and log in, and then I'll navigate you towards the recordings. And we record everything, by the way. So this series, Stocks on the Rocks, gets posted to the website for members to log in and watch it from their community portal. But it also gets posted on YouTube after the fact, right? So if you're a Traders Army member, you're going to go under student resources. You're going to go into the pro
Not
member.
sure. I don't think you're not sure. All I'm
That
seeing
is
is the.
that is you're absolutely right. I was only sharing the splash screen earlier. Now you should be able to see it. Here we are.
I got you, boo.
Oh man, you totally missed my login information as well. You could have grabbed that.
The same as mine. My same password as me. Dot 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 dot.
But mine is spelled out.
Got it. Okay.
So you're going to go into your student resources, pro member, community lobby, and that'll take you to the page where basically all of your member resources will live as a pro member. And so obviously here's where you would attend live, any of the trades that we have posted in Wealth Essentials or our options and strategic trader room, download documents, all that super fun stuff. And you scroll down a little bit more, and here is where all of your archive trading rooms and everything is posted. So the trading rooms are going to be the futures trading room, the options trading rooms, and Chuck, your strategic trader on Tuesday mornings. Let's do that. And then I've got my every other Wednesday Wealth Essentials. You've got your every other Wednesday crypto trading rooms with Herman. You got your options deconstructed, weekly market brief, which comes out every Sunday, and then here's your good old stocks on the rocks. So they're all here. So you just click on that, and every trading room we have ever done, I think, Chuck, is in here somewhere.
There's a lot of hours. So
That's a lot of hours. What's up, Ryan? Hey, by the way, Ryan, nice to see you. Turning on your camera there. This is
you're welcome to do that. By the way, we encourage it because Ryan, do you have a drink? Come on. Yeah,
coffee.
Let's go. Coffee counts. Pastor Leo, what's up, bro?
Pastor Leo, there he is.
Hey, how you doing, guys?
What's up, everyone?
Dream. Corey, what do you have tonight? What are you drinking tonight, buddy?
Old rum and Diet Coke. What do you got?
I'm a little Drambuie and Scotch mixture with my clan sigil for Scotland, baby. Let's go.
What are you, 75 years old? What?
Shut up.
What the heck? Isn't it your
Drambuie and
bedtime?
Scotch is delicious.
Isn't it your bedtime now, old man?
Wait a minute. Didn't you say you just put Diet Coke in rum?
Yeah.
Obviously, this is not rum. This is we need to talk. You need to
No.
know
It's not the kind of rum that you and I.
product.
No, it's not like sipping rum like the ones that you told me about, which I have yet to receive any yet, Ian. But hey, that's okay. I'll wait.
More like
All right,
Captain
when I
Morgan.
make enough to
rum.
buy the distillery,
You gotta
look you up.
just send me the names. Just send me the names. As a matter of fact, you know what I think would be awesome, Chuck?
Yeah.
It's really nice that we do this Stocks on the Rocks thing, and we're going to get to questions, and we're going to have a whole lot of fun here in just a second. But I got to thinking that wouldn't it be awesome if we turned Stocks on the Rocks into a legit podcast, and we had breweries and wineries and distilleries sponsor the show and fly us out to do their show once a month from that brewery or distillery or winery, so we could promote the heck out of that, but then also, come on.
All 31 views we have on YouTube are going to help get that sold.
I know, all 31. We need to get that viewership up. So there it is.
No, but that's a great idea.
Isn't that a fun idea? Doesn't that sound like fun?
Listen, I'm a big fan of that. I'm happy to be a part of it.
We could invite members out and people out who are in the area, and it could be a live podcast, a live Q&A. We could live stream it. Come on, I'm
happy to be a part of it, man. I love
coming
it.
after you, Joe Rogan. Let's go.
That's right. He's going down.
So this is a big, just kind of an open Q&A, and we like to hang out for, the next hour or so, and just, I'm sure you guys have lots of questions and challenges and things that you're, just dying to know, and you want, just want to kind of rap about some stuff. Share some trades that went your way.
I got
awesome.
a one-off question for both of you.
What's up?
Who do you recommend for a forex broker if you have a real account, not something with $500?
I can't give you a great answer for that.
Okay, that means you've figured out the same thing that I have.
Well, I haven't figured out anything. I don't know anything about Forex trading. Like, I've never traded Forex.
Awanda's pretty good. I've heard good things about Awanda.
They're excellent, but
Awanda.
you're limited by the number of units that you can put on for any individual trade. It's usually somewhere between no more than 2,000 or 3,000.
Now, here's a thought, Ian. It's not like a normal. It's not like a normal brokerage. I mean, it kind of is in the sense that you have to fund your brokerage account. But our good buddies over at Maverick Trading. I don't know. You've probably heard me talk about Maverick Trading. It's a options. They have an options prop firm, a legit prop firm, not like one of these like evaluation prop firms where you just trade. They
never actually want to pay you.
They're never actually. It's typically not real money, and if you make too much, they don't want to pay you. But they have a Maverick FX, a Forex division, which is where they started. And you fund an account. That's with your what they refer to as a performance bond, and they will leverage you out even more than you have on the Forex side. And to my knowledge, I don't know. I could took you up and connect you with them if you're interested. They trade off of Interactive Brokers, and because you're trading your capital plus firm capital, you get to keep, I think it's like 70 to 80% depending upon where you're at, of what you make for the firm, and you're using some of your money, somebody else's, but you're trading with Interactive Brokers.
I appreciate the idea. I'm not looking to do anything that's permission based.
What do you mean permission based?
Trade my own damn account. Thank you very much.
Oh, gotcha. Well, it's not permission as far as you have to clear all the trades for them or with them or with their advice. You're just leveraging more money than you have, and they give you the freedom and flexibility to do it. So if that's not an interest,
I don't do rules, regulations, permission, licensure, certification.
You're a rebel, bro.
None of that.
I'm done.
None of that is. Yeah, but none of that is required, Ian. If that's your roadblock, none of that's required. You're not licensed or anything like that. So it sounds like it might not be a fit, but that's okay.
Check it out anyway.
But they do trade with Interactive Brokers. They trade with Interactive Brokers, and they seem to like it just fine. They have access to pretty much every market.
Is one that I've actually heard from the U.S. based for
Say that again.
Tasty FX. So it's a division of Tasty Trade. So Tasty FX is another one that I've heard pretty good things about.
I'll check it out.
But I don't have experience because I am a futures guy. I would rather trade currency futures than the currency pairs themselves. So I can't give a great answer for that because it's not something that I normally do.
Well, since Herman has turned me on to this, there's no looking back.
What did
Love
Herman
it.
say about your brokerage selection?
Oh, open a small account with Owanda. It'll fix all your psychological problems. It'll prove to yourself that everything works. I got a million green trades going on. What can I tell you? Yeah, it's, if it ain't broken, I'm not going to fix it.
Amen to that.
So you're happy with Owanda, is what you're saying.
Take a look at Tasty FX too.
I will. I need something big. I need something bigger and better though.
So Thomasine asked, "What are my thoughts on the Texas Stock Exchange?" I don't really.
I had that question too. I'll leave you to it.
I don't have much on the Texas Stock Exchange as far as what there is. It's brand new. I think it just opened last month, I think. And the idea is that it's supposed to, it's a listed exchange in Texas. And I don't know all that much about it, so I can't really comment much. My question first is how many brokerages are going to get a membership there, right? How many brokers are going to do that?
Yeah.
And so it really matters what really matters is how many brokers link up to that exchange to add to that exchange's liquidity. And so, I don't know how big it's going to be. I'm actually looking at their membership directory right now.
Chuck, if I had to speculate, I would bet it's going to be big because I bet they're going to push really hard to buy order flow from brokers and probably offer much bigger incentives than any other exchange is right now in order to get that order flow.
As it stands right now, this is the currently listed membership directory of the Texas Stock Exchange. So these are the brokers that are routing. So basically, think of it, and this I think is important for everybody to realize. And I don't know if everybody realizes this. There's a ton of stock exchanges: the BATS, the Archipelago, the New York Stock Exchange, the NASDAQ, the Philadelphia Exchange, the Pacific Coast Exchange. Like, this is just another exchange. Think of exchanges like convenience stores. That's all it is, right? I'm going to use convenience stores. 7-Eleven is not all that different than Circle K, is not all that different than all of them, right? Maybe this one's Buc-ee's. I don't know. But it's just a place to buy and sell securities. And so, but you have to be a member in order to buy and sell on that security. Here's what's interesting. NASDAQ is a member of the Texas Stock Exchange. So NASDAQ can route orders through the Texas Stock Exchange, and they play arbitrage. If I can buy it for $1 over here and sell it for $1.05 over here, I make a nickel no matter what. And so when I look, you've got NASDAQ, you've got JP Morgan, you've got Interactive Brokers. So you have
Apex
a bunch
is
of
there, Archipelago's there, Citadel is there.
Archipelago. These are all large clearing firms that almost act as their own exchanges.
Well, Citadel's one of the biggest, right? And it's right there in the middle.
What's that?
Citadel's right there in the middle.
Citadel's right in
massive.
here. Yep. Bank of America's in here. BNP Paribas. But by the way, this is a small list. This is not a big list, right? I mean, this is not a lot of members that are in there trading. It's a lot of big-time players, but it's not a huge list. The more firms that jump into there, the better it'll be. So I don't think it's going to make a lick of difference yet. I really don't. I don't think it's that big of a deal. Now, what does it do? It adds liquidity. It adds liquidity to an existing marketplace because it's another place to shop. Jokingly, my 6-year-old daughter, who's, the words out of Babes, I live in Houston, right? So we're building like it's going out of style. And literally my daughter saw a new strip mall being built. They tore something down. A new strip mall's going up. And I swear to you, my 6-year-old daughter goes, Daddy, they're just going to put another nail place in there. We don't need more nail places, right?
Makes
That's
for
kind
good
of the way I see
competition,
this
though.
Texas exchange. It's just another exchange. Do we need another one?
Will that change the hours of bigger volume? Like I know, working with futures, I'm always looking at the 9:30 or Globex Open to see volume to trade in the futures. Will Texas, being that we're 1 hour behind, maybe add a little more?
No, especially in futures, because futures are all traded at either the CME or the ICE, right? Because they're very centralized to one exchange. So this is just a stock exchange. It's not a futures exchange.
I do like
So
that it'll
stock
add
is
that
good.
level of competition between exchanges, though.
Now, what I am hoping is that the more exchanges open, the tighter our spreads get. Right? I
Yeah.
want to see spreads go back to where they used to be. I hate Robinhood with every fiber of my being because I genuinely believe that Robinhood has made trading more expensive for all of us. Because what Robinhood did was that when they came in and they said, we're going to democratize trading, make it available to everybody, and we're going to make free commissions. No, but nothing is free, right? Like, how are you a multi-billion-dollar company if you're free? Well, what they did was Robinhood preyed on the, I don't want to say unintelligent, the uneducated investor, and they spread the word free all over the place. But what they did was they widened out the bid-ask spread on the stock. But then so many customers went to Robinhood that every other broker was like, well, we should do this too. And then they make more money because then you actually wind up paying more with a wider bid-ask spread than you do with a 1 penny bid-ask spread and a $7 commission.
That arbitrage you talked about it being a nickel goes to like 25 cents a share.
Right. That arbitrage gets humongous with all these and now it's really leaked into the options arena, and it's made options significantly harder to trade.
Yeah.
I do agree, Thomasina. They do make trading look like gambling, and I refuse to trade at a broker that offers prediction markets. I can't do it because prediction markets are 100% gambling. Anytime you've got a binary outcome with no stop loss, it is gambling.
Yeah. Interactive Brokers does it. I don't know if you knew that. They allow it.
I didn't know they got into prediction markets.
Uh-huh.
Oh.
Yeah. All kinds of stuff, man. All kinds of stuff.
I mean, now I can see the value in prediction markets only if you're using it as a proper hedge, right? Listen, I will take the under on that, Ariel. Wait, what am I betting on? I bet you that I will. Never mind.
You can't even bet right. You should probably stay out of it. You don't even know what you're betting on.
I have no clue. I'm the world's worst gambler.
I don't even try.
Demo account.
I don't even try, but I'll tell you this. Cash, my son, Cash, Chuck, my oldest son, he's 19. He's gotten into it a little bit, and especially during World Cup, him and his buddies and Maverick, my youngest, was into it, and they were, $20 here, $10 there, nothing crazy. Cash turned $20 into almost $2,000 during World Cup, and Maverick blew up every bet he made. He did not do well at all. Awesome. I think he probably lost like $100 total, but yeah, Cash turned $20 into $2,000 almost. He's pretty dang good at it. He's pretty dang
Sounds
good
like
at it.
Start a YouTube channel.
He should start a YouTube channel. Hey, kid, get off the couch.
What other? Come on,
these are great.
You got questions you guys want to talk about? These are good ones so far.
I was just trying to look up on the prediction market thing at Interactive Brokers. A lot of their prediction stuff deals with political, races, presidential candidates, governor candidates, Fed decisions, Texas state general election, Hormuz returned to normal. Come on. Yeah, there's some.
Well, I mean, I can see those as hedges against other equity positions, right?
I can see that.
But the Packers versus the Lions, I just don't see that as a hedge against a position.
No.
They're getting around gambling rules because they're saying that it's a that it's a hedge for local businesses to hedge on the winning of the spike. Like they've used all kind of twisted thoughts.
Dude, check this out. Who will be charged with a federal crime in 2026? And the only two options are Anthony Fauci and Tim Waltz.
I'm going long. I'm going long.
This is what highest temperature in Los Angeles, 72 to 73 degrees. I mean, what is that? You know?
I mean, that's only if you're offsetting Con Ed stock, right?
That's true. That's true.
No, wait, Con Ed's not Los Angeles. What are you guys? What's your power company?
Oh,
Con Ed's New York.
no, yeah, we're well, I'm Southern California Edison.
Oh, you're a different Edison. Okay.
I'm a different Edison. Yeah.
All right. So what else? What other questions
great.
y'all have? Come on. These are softballs today.
Yeah, but they're
I thought the other thing that we could do, Corey, is if you want, one of the things that we don't do very often is just break down a trade from the foundational level from start to finish. Both on the charts and then moving into an options position. I didn't know if that was something that maybe if we don't get a lot of questions, if you thought that was worth going through today.
Looking at the group here, and there's definitely some that know how to do that, and definitely some that could use a refresher. Some names I don't recognize as participants in the trading rooms, so they might be able to use it. Do you have a stock? Do you have a trade in mind?
Well, I mean, I got a couple things that I've been looking at. Do you want to grab one that you looked at today in the trading room?
Real quick, Chuck. I'm just excited. This week, I got my first prop firm payout on futures.
Let's go!
Nice.
That's awesome,
so many,
man.
After blowing so many.
That's great. Congrats. I love to hear that.
Yeah, so it's like, whew.
Nice job. Now keep it.
Yeah. No, the thing is, like, I'm not trading that account into the finish. I got the proof. I'm not going to touch it until I get the money in my bank.
There you go. That's exactly right.
Yeah.
Let them transfer it in.
Yeah.
That's awesome. Congrats, man. I'm super happy to hear that.
Yeah.
Yeah, that is awesome. I had one on Lyft this morning, Chuck, but it's gone. It's already moving in our direction.
I see that. Well, the one that I had was Lockheed.
Oh, LMT, yeah.
Which I brought up in the trading room on Tuesday morning, which I think still has room to run, like a lot of room to run long term. I'll tell you what, a good breakdown was UNH, unfortunately for me.
Did it already break down? No,
right at a breakdown point right now.
It's at a breakdown point right now. I had a little bit of a breakout.
You want to build on that one? You want to pull up a UNH chart? You want to share your screen?
Outlook on, well, it's your trade. I had a little bit of a breakout anticipation in Intel off an inverted head and shoulders, and it broke out today. Just a little bull put spread, nothing super directional. But yeah, why don't you, you want to go through UNH?
Yeah, can you pull up your I don't have Thinkorswim open. I've got TradingView. So if you have Thinkorswim open.
I have all of them open. I have TradingView as well.
Yeah, if you pull up TOS, that'd be great.
All right. How's that?
Well, you guys pulled that up. One thing that I noticed, and I don't know if anybody has the same situation, while trading, I think I have seen that I do better with TradingView than Trade08, Ninja Trader, Well Charts, TradeSila. So it's like, I don't know why. I don't know if that's something. I don't know if it's psychology.
I do believe it's psychology because it's really a lot of it is what are you comfortable with, right? Why do I like mom's meatloaf and not grandma's meatloaf? What's the difference? It's like sometimes you're just gonna feel better about certain platforms and just do better with them, even if it's the same info.
Yeah, it is so funny that I've been struggling with Trade08, but I log in Trade08 through TradingView, and I have no problem. I'm like, come on.
Yep. So looking at this United Healthcare trade, kind of what I'm looking at on this is, as we can see, it's a daily chart, right? But on the daily chart, the thing that is really sticking out to me is that we have a little bit of this sideways price action with lower highs, right? Same lows, lower highs, a bit of a descending triangle pattern that has formed. Now, that's all well and good, but almost more importantly than the descending triangle that is formed is the area where Corey's already highlighted this zone down here of demand. And that demand area really, when you think about it, acts as a bit of a price magnet. And anytime that I have a price magnet of a level, markets are always in search of balance, right? The origin or move in price is when you get out of balance one way or the other. And we know for certain that at that level right there, we know that that is an area where we were way out of balance. We had way more buyers and not enough sellers. And that caused price to rally up out of that zone. So I guess the better question then becomes is, do we think that all of the buyers who wanted to buy got their orders filled? And I don't think that they did. Matter of fact, I think that there's unfilled orders that exist there. Now, we have to remember what these exchanges exist to do. Exchanges exist to get orders filled. So markets tend to trade to areas where there's the highest likelihood of an order getting filled. So looking at that, knowing those two things about United Healthcare, when I look at UNH, one of the things that I want to do is say, well, where's the zone where I believe is the highest probability where we may get to, right? This area right here is, I believe, this 380 is our target where we've got an unfilled amount of orders just sitting there waiting to get filled, right? So if I think of this as my target, I'm going to say, well, where am I proven wrong? At what point am I proven wrong? Well, I'm proven wrong if it goes up. And it only has to go up a little bit for me to be proven wrong. So if we get above this declining trend line, I'm going to be proven wrong. So now I've got an entry, which is a breakdown. And really my breakdown entry was given me today below 400. So I've got an entry at 400 or so, a stop right there above, and then a target a little bit lower than that. And if I've got my entry, my stop, and my target all preset, now I can go in and make a determination of what's the options trade that I want to build around that. So we can do it a couple of ways. Number one is maybe you do an options trade with the stop loss to minimize your exposure, or maybe you do a directional position with no stop loss so that you're just willing to lose everything you put into the trade. Or you do a non-directional trade that says, as long as it stays below 410, I'm still going to make money, right? So then we've got to go into the options and analyze it.
Chuck, can I
anything to
just
add
say
on
something?
that one? I mean, that's kind of my outlook on the stock.
I do. Yeah. So when you were talking about something possibly directional, the thing that jumps out at me first is if your stop is roughly where I placed the red line here, and I was kind of building out this blue line as your breakdown spot, and 380 roughly is your target, you're really only getting about 1.5 to 1 reward to risk, unless you can somehow build a no stop target that gives you better than 1.5 to 1. You're not even getting 2 to 1 until you get out to 367. What I have here is, I'm sorry, this is 3 to 1, 4 to 1, 5 to 1. So 2 to 1 is probably going to be somewhere around here. So you're barely getting 2 to 1 out of the directional trade. And so I would probably, and I don't know if you're going to say this, but I would probably lean more non-directional and just do something that doesn't require a really big move. But then I would also need to sacrifice risk reward for something like that. So something that needs a big move, you want bigger reward relative to risk. Something that doesn't need that big of a move, you can sacrifice some reward to risk. You know what I mean? So I'd probably lean more, credit, bear call credit spread on this, but I don't know. I want to hear your thoughts on that too.
Yeah, I mean, on this particular one, what I'd want to look to see is, especially if I've got a really nice minimal spread, I might want to do something that's a no stop position. And see, what does a no stop trade get me at like the 380, 375 bear put spread, right? And as long as I can get that for a quality reward to risk, then I might be willing to do it. So that's
How
kind
far
of where
out?
I would start first.
How far out would you go?
I would probably go to the September 18th expiration. And in that case, if we're doing something close to where my target is, 370 by 380. See, in this case, it's 370 by 380, or you're doing, yeah.
380 puts your max reward potential at 657 if the stock is at or below 380, which is your target, on expiration. Risk is 343, so you're pretty much right at 2-to-1. Max risk, max reward.
I don't know in that case that this one's going to make as much sense, right? I want to be probably more like a 4-to-1 in that situation if I'm going to do that. So I would then probably look and say, all right, instead of that, what can I get paid for the 410 by 420 bear call spread?
Well, hang tight.
For just to
hang
stay
tight.
below that.
Hang tight, because I went out another to the nope, not August 28th. I meant to go to the September weeklies. So those monthlies are only giving us $10 strike increments. The weeklies give us $5 strike increments, so we could use the same anchor strike.
Your spreads are not as good on those.
Oh my gosh, they're terrible. Yeah, they're awful.
As Charles Barkley would say, those are terrible. Terrible.
No,
it's Karl Malone. I think that's Karl Malone. It's terrible. You don't know who those guys are. They're basketball players, Corey.
Those are terrible, Peter.
Yeah, I think the bear call spread. No, it's not really, Thomasina, the fact that, or Ariel, it's not the fact that the market's closed. It's in this one, it's just that they're bad. I do like,
there's almost no
August
open interest on
395, 365 bear put. That 395, 365 put spread for that August 26.
Which one?
Or August 21. I'm sorry, August 21. It's the year 2026. He's got the 395, 365.
Directional. Which is certainly killer risk relative to reward.
If we come down hard, that one would be extremely good.
Right. But you got very little time for this to produce the move that you need it to move, which is still, and if you're talking about it only gets to 380, your reward potential is about $1,100. Risk of 365. That's great. That's good. You're not getting to max reward in 8 days.
You sell an extra 365, it becomes a bit of a broken butterfly, right?
Like, I think I'd be fine giving it 22, 29 days, something like that. I'd be curious what that looks like, even at this one, 380, 385. So here's risking 128 to make 372, and it only has to go to 380, which is your target.
Right.
That's
so the downside with this is back to Ariel's point. If it does get there quickly, you don't make near as much, right? You really need time decay in these.
You really need the effective time decay. So if you're going max risk, max reward, you're not only timing the direction, you're timing how long it takes to make that move, which adds an element of difficulty. And that would be where, again, I don't know that, I could maybe see would you do 380? What was Ariel's? Whose was it?
395, 365. That was the August 21st.
I might even go, here's September 11th. You're getting in for about the same price, 360.
What are those spreads on the September 11th?
Oh my gosh, they're probably horrible. I didn't even think about that. They're not as bad as I would have thought, but yeah, the open interest is pretty
They're not hot garbage. They're lukewarm garbage.
Lukewarm garbage. Yeah, so sticking with the monthlies on something like UNH probably makes more sense.
Right.
Where was your stop on that? About 408. So the other option would be maybe a 410.
Or 10,
450.
That's not terrible. 410, 412.50.
If it goes above 410 and you're like, oh, I was wrong. Or if you put your stop at 408.33, I'd probably put it at 410, but 408.50 roughly, just because it's above those last couple pivots. You're at a 1-to-1, which is fine for it staying where it's at, or
staying below that level.
I'd probably choose 410 as the stop. I might even, give up a little bit more, 410.10, because I kind of look at it as if the stock is below 410, I'm not wrong. Yeah.
Right.
If it's above 410, I'm wrong, right?
Risk 2.5 for 50 cents. Well, yes, technically that's the risk, but in reality, I would definitely have a stop loss at my short strike. Right? Yeah. I'm definitely going to have a stop loss either at my short strike or at the theta switch point. So it's not going to be a full loss position. What is that at the theta switch point?
If you go all the way up to theta switch, it's about $70. So you're risking 70 to make 50.
That's not terrible. With a higher probability of success, what's our probability score on that one? Giving us what's the volatility's probability score telling us?
Well, the market doesn't have to move at all. So if you look at, not implied volatility, but if you look at, I was looking at
delta.
Two things, either delta or, so delta's 25. So you're talking
75% probability of success according to delta. And then according to the probability analysis tool,
which I'm going to go with this one, right? Probability of out of the money, 76%. Same thing.
76%. So
same thing. It's the same math. It's the same math. Whether you use delta or probability of expiring out of the money, it's pretty much the same math.
Yeah.
So I like that trade.
When you've got essentially a 1-to-1 reward to risk, but a 75% probability of success, that's a great setup. Now, the key is you got to do that a lot over time in order to be successful, because it's not huge returns, but that's playing the long-term odds, right? That's switching from being the gambler to being the casino, right? There's a reason that all those big hotels are gigantic on Vegas. It's because in blackjack, they have the odds. In craps, they have the odds. In roulette, they have the odds. Well, in here, if you've got the odds in your favor in a 1-to-1 reward to risk trade, then you're going to be in a slightly better position.
Yeah. And Ariel points out with those 51 cents. I was going to say, Ariel says that with that 51-cent credit, I can buy a mic and stop writing so much. You could. Now, that could be sarcasm, because I look at this sometimes too, and I hear this from people that says, well, that's not a lot of money. And I'm like, well, you're probably not doing one contract. You're probably doing multiples, right? So you take your risk.
Thomasina, thank you much for joining us tonight.
All right, Thomasina, be good. If you say, hey, I've got $500 or $300 I'm willing to put into this in terms of risk, then, you could be up in the 5 contract range, and all of a sudden, and I love the fact that the price doesn't have to move. I do appreciate that. It doesn't even have to move. Oh, not 1, not 0. We want 1.
Yep. Yeah.
So then your stop gets up here around 410.
That 75% doesn't take into account, or the delta doesn't take into account, is the descending triangle pattern and the breakout below a whole round number level of support, right? Those are two other things that are just not taken into account when you look at the Vega, the implied volatility, probability percentage, and delta. Those don't take into account charts. We're adding the chart as an additional odds enhancer, if you will, to our analysis.
And I would go so far as to say, Chuck, that your odds will never be because of the option position that you build. The odds are always tied to the chart itself. The options are so efficiently priced for expectancy of hitting max reward versus max loss, and the premiums are actually calculated using the options pricing models to represent the fact that you have no edge in just the option trade alone. None, right? So if we say that, hey, and this is why I don't say this trade has a 76% chance of working in your favor. That's not actually accurate. What's more accurate is 1,000 trades just like this one. 76% of them should work out in your favor. The other 24 should not. You should hit max loss on 24 trades, max reward on 76 trades, and the net outcome is probably going to be fairly balanced. You'll probably make little to no money, if any at all, if you just use that math. That's how efficiently the market is pricing options.
Corey,
so you're
everything
only
changed in my head when I fully embraced what you just said.
right.
Who cares about one trade?
Mm-hmm.
Yeah.
One trade, meaningless.
Right, it's meaningless. And the math behind options is even less meaningless if you try to put meaning to it, like, oh, I've got a 76% chance of winning in this trade. Well, not if the stock is in a severe uptrend. And so if you're going against trend, if you're going against, market breadth, if you're going against all that, you're not going to have 76, you don't have a 76% chance that this trade wins. But over time, a large number of trades, a big sample size, options are pretty efficiently priced here. So your only edge in trading is how you view the charts and how you build a trade around it. The option position is just how you leverage that outlook. That's it, right? It does feel good to say, hey, 76% of my trades should work out if I trade this way. But then you stack the odds of the stock actually breaking down and this descending triangle breaking down to 380. That is where your odds are right there. So the most important thing you could learn out of anything that anybody teaches would be how to read a price chart and how to understand the magnetic qualities of those unfilled areas of demand and supply that where the imbalance occurred, right? Because
and that ties right back into, like, legitimately what we were talking about earlier today about the question about what does the Texas exchange matter, right? The reason the Texas exchange matters and the reason any exchange matters is because all exchanges exist to create liquidity in a market. They all exist to facilitate trade. And the more exchanges there are, there's more people that want to trade on them. Right? And that's it. And now, because they're all connected electronically, that's what's going to keep them efficient and keep them moving.
Yeah. I started saying it this way too, Chuck. There is unfinished business down here. And the market, if you have unfinished business in your life and I have unfinished business in my life, I want nothing more than to finish that and get that off my plate. And so that's where I think that when you talked about earlier why this has such a magnetic quality to it, it has this gap that was unfilled. It was a big move out, breakout move. There's a lot of unfinished business down here, and if I'm an institutional trader who's got business that I need wrapped up, I'm going to do everything I can to get that stock down to 380 so I can wrap up that business. Right? That's why charting is so important. That's a great example, Chuck. I like this trade. I don't know that I like the trade today. I like it below 397, 398 when it breaks below this low. But I think that trade is still going to be there.
I may or may not be looking at that because I may or may not have sold a naked put on it at 410 and then rolled it down to 400, and now I'm rolling it to 390. So there is also that as well.
It sounds like you need a hedge.
I do. I'm going to hedge by selling the 410 bear call.
Did you just use this segment to justify your need to hedge tomorrow and you wanted us to help talk you into it?
No, I already knew it.
Okay.
Listen, and here's what's great. And this is one of the things that I love most about options. And I say this a lot. I am married, which means I have a PhD in being wrong. And what's great about options is that you can be wrong and over time still make the trade work out in your favor by adjusting and rolling, right? And so UNH, I will tell you, I had a bullish sentiment on UNH a while back when we had come into, after our gap up and our pullback right in that level that you've got highlighted. I thought, okay, that was probably a bit of an overreaction after a gap up. Now we've filled the gap. There's probably a chance to run up, and it just didn't.
You're talking about right in here?
It doesn't mean that I take max loss. It means that I roll it and adjust it as long as I need to.
You're talking about right in there where I just highlighted?
Yep.
Yeah, I can see the 410s being reasonable.
Back then, 410 was a good put to sell. Then we had to roll it. Then we have to roll it. And that's okay. I'm all right with that.
In the famous words of Fred Durst,
keep rolling, 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 rolling.
what?
The fact that I know that shows my age. If you know that song, then you probably have a favorite pain ointment.
Fentanyl
Tiger
works
Balm.
magic.
Tiger Balm.
Tiger
Balm.
Balm. Yep.
I remember Tiger
See?
Balm. See? Yeah, Tiger Balm. Ian says, if you gave me that FX pair with that chart, I'd jump on it. On the short side, Ian? Is that what you're thinking?
Yes.
Yeah. Yep.
Stop above.
UNH paired to the dollar is weak.
Full position if it goes halfway in. Otherwise, take a half. Take the whole thing off at the gap and be done.
Yep. I like it. I like it, Ian.
And I just built the trade right in front of you on my end. I'm done. Next, find the next one.
Yeah. That's what efficiency looks like.
Love it. All right. What other questions? What questions do y'all have for us? Let's go.
It's been very active tonight, Chuck. I really like this.
I like it. I like it a lot. I'm glad you turned those on.
What'd I turn on?
Oh, let's talk about that. I'm glad people turned on their cameras. I recently came about a YouTube video about deep in the money options. Basically, buy a 90 delta call versus buying the stock, mainly leaps. What do you think about that strategy? I don't like it. And here's why. The further out, I just don't like buying leaps as a replacement for stock because you are more sensitive to volatility changes. And you now have two things that are going against you. You have Vega and Theta that are going against you. Like could go against you. Vega could go against you, maybe can go for you, but realistically go against you because of the long pole effect of volatility. And then Theta. If you're going to go to a 0.9 delta anyway, you almost might be better off doing a synthetic long and going the 0.5 delta and the short put at the money at the same time. Then you get a delta of 1 and you're Vega neutral and Theta neutral, and you're probably still going to have less margin requirements than the 90 delta.
Yeah, that 90 delta is going to be expensive. I will say, though, the deeper in the money the option is, the less extrinsic value you have in that option. You're purely paying for intrinsic value. So at the time of entry, your sensitivity to Vega and Theta might not be all that high, depending upon how far out in time, like a long-term option, like a leap or something like that. It might be a little higher, obviously, than a 3-month option. But if you get to the point where that stock now creates an at-the-money option situation, you are the most sensitive to Vega and Theta if that option becomes at the money, meaning if the stock goes the wrong way. If the stock keeps going the right way, then great. But here's also I don't know if it's a problem with that, but I'm going to demonstrate something super quick, and I'll tell you what I like the opposite of that. Chuck, do we know how to do a whiteboard situation?
Yeah, you go to share.
In Zoom?
Yeah, go to share in Zoom, and then I think at the top you can go to more, and then no.
No.
You used to be able to just do whiteboard. I don't know
You
where it is.
used to be able to do whiteboard, but here's what I'm going to do.
Oh, it's under.
That's okay.
It's under share and then files, and then there's whiteboard.
That's okay. I just made my own whiteboard.
Perfect.
All right, so I'm going to visually draw. Ariel, you might have seen this before, but I'm going to visually draw the delta curve along with gamma, and I think this is what I would prefer more than deep in the money, right? On something that I'm more bullish on. So delta, if you look at a long call, looks like this, where the lowest delta you could have is a 0. And the best delta you could have is the 1. And right at the money, you've got a 0.50 delta. This is your delta curve. And so if you're buying a 90 delta, you're buying way up here, and you don't have any real room for the delta to grow and give you a really leveraged position in the option, which is options are kind of more so designed for that. And you'll notice that the steepest part of this, what I call the delta curve, is right here between, roughly, I would say a 35 delta and a 65 delta. That's like the steepest part of the curve where you're going to get the most bang for your buck in the event that you own an option in this 35 to 65 area and the stock price goes up. So we'll say stock price goes up. You're going to get a really fast acceleration of delta credits because gamma is really working for you. And gamma looks like this. I'll actually put this on a different color. Gamma is the growth rate of the delta as the stock price goes up or down. And so gamma is going to be more of a bell curve like this. Okay? And so you can't have any less than 0 delta, and you can't have any more than 1 delta. Therefore, gamma way out here, way out of the money, has to be 0, and it has to be 0 out here because gamma can't affect delta anymore if it's already near a 1 or near a 0. And so at the money has the highest gamma. Now, Chuck, if you remember when you and I were taught options 20 years ago, we were taught to buy the 70, 75 delta.
Yep.
By the 70 delta. And what I experienced when I was doing that personally was, if I'm right, gamma doesn't accelerate delta all that quickly, and I would actually make money slower than if price actually went against me in the position and started to fall back. You would actually accelerate. Gamma would accelerate that delta for just a moment. And so I got to thinking, I don't understand why we were taught to buy a 70 or 75 delta, not to mention the fact that as you get into this 70 to 90 delta range, your bid-ask spread starts to go really wide. You can fit a truck through deep in the money options, right?
And that, I think, is where most people who don't understand the impact of those second-level Greeks get hurt when they trade options and they just go off of that first level and not know what creates that.
Right. I also the cynic in me, Chuck, makes me think that whoever was teaching us needed to have a market to sell their options to.
That's a good possibility. It could be the people that are teaching you options trading are the ones on the other side of your options.
I'm like,
trading.
hang on a second. So anyhow, then I started to really question everything. I'm like, does that even make sense? And then I started to really kind of appreciate this relationship between delta and gamma. And what I started to really explore it was, what if I buy the 35 delta? I'm about as equally sensitive to gamma and theta as I am at the 70, right? Because we're about equal distance in the money versus equal distance out of the money, except I'm buying a cheaper option at a 35 delta, so I'm not spending as much as a 70 delta. Second thing is if I'm right and the trade starts moving in my direction, the speed at which I make money is accelerating. So you make accelerated profits if you're right. And notice, if I'm wrong and the stock starts moving against me, the rate at which we lose money is decelerating. It's the other way around if you buy deep in the money options. The rate at which your delta increases is slower, right? And the rate at which your delta decreases is faster. So I don't love the sensitivity of delta related to gamma, which is all related to, am I right? Is the stock going up, or am I wrong and the stock is going down? So I've actually switched to the exact opposite outlook, Ariel, where I prefer to buy out of the money options. This is if I'm just buying a call option or a put option. I prefer to actually target entering at about a 30-35 delta. And if I'm dead wrong, I spent very little money. And the acceleration of delta thanks to gamma on the way up is faster. And then if I'm losing money, I lose money at a decelerating rate. So I actually take the exact opposite view of that YouTube video that you saw. The only benefit that YouTube video provides buying something that's so deep in the money is less exposure to Vega and Theta, but you get you get, this really expensive position. And I do agree with Chuck. You'll probably end up paying less in margin if you just go for the synthetic long position.
Yeah.
Right? Now, you don't have defined risk in a synthetic position, but, I would actually rather buy 3 of the 30 deltas versus 1 of the 90 deltas with all the dynamics that I just mentioned.
Yeah.
Right. That's
And
my reason.
That gives you the ability to also diversify your assets more with your portfolio. You can be spread out. Like, nobody has an unlimited amount of money. And so that allows you to spread your portfolio out around multiple stocks in multiple sectors without being limited on larger positions.
Right. Yeah, and I agree. Ariel puts in the chat box, you go 2 years, theta is almost nothing. And especially if you're deep in the money, it's next to nothing. Vega would be a bigger issue because the further out you go in time with your option, the more sensitive your Vega is going to be. But even if it's deep in the money, you're going to pay a lot of money for that option because it's mostly intrinsic value. But your Vega might not be super sensitive. But I can almost damn near promise you and guarantee that the spreads are going to be enormous. And so managing that position with super wide spreads might be tougher than, something that's not so deep in the money. But that's how I like to nerd out on option Greeks, by the way. So thanks for letting me do that. Nerd.
You have that skill. Nerd alert. Awesome. Well,
we should make that a YouTube video.
I was just thinking that exact same thing.
To counter the other YouTube video.
I know.
Here's why not. Hey, send us that video, Ariel. I'll say, here's why not to listen to that guy. No, I won't do that. I actually think that there's a lot of great traders out there. I would never pin.
Everyone's got their own way to do it.
Everybody's got their thing, man. Whatever works for them. And that's, I think, the goal for all of us is to help traders develop a strategy that they know how it makes money. They know how it manages risk. They're more likely to be disciplined to follow it if they've come to develop something that works for them. You just hand somebody a trading
on here today. Keith, what's up, my friend? Long time no see, brother.
I saw Porter in there. What's up, Keith?
Oh, man. He says, why does USO not offer opportunities in the options market? I don't know.
What you talking about, Willis?
They do, but the spreads are just not what they used to be.
Well, I can't imagine why. You get that Strait of Hormuz opened up again and things smoothed out over there.
Will tighten up. The spreads are good. It's fake news that they're bad. Fake news.
This thing gaps all over the place. If I were a market maker, I'd widen the hell out of those spreads too.
That's exactly it. That's exactly it.
They widen spreads when there's so much uncertainty. I actually just had a conversation about that today, Chuck, with somebody. What was interesting, and I know we're about the top of the hour here, but AMAT, right, just had earnings tonight. And AMAT beat revenue, beat earnings per share. They closed today at 534. And they're trading at 509 in the after hours.
Yep.
And I heard somebody asking me, when stocks move that big, right, which is not that big, but I mean, it's a 25, 26 point move. Is there a way that we can capture that move, right, from one day to the next on that big gap? And I said, well, do you know it's going to gap down, or do you know it's going to gap up? Do you know it's going to gap at all? And they were like, well, no. And I'm like, so what would be your initial thought? And they said, well, couldn't you just buy a straddle or a strangle and, buy calls and puts, and then whichever way it goes, one's, going to make more than the other? And I'm like, well, that depends on how inflated those option prices are. And I was like, here's how you know that market makers see you coming, all of us, from 10 miles away. Because at the close today, the option that expires tomorrow, right, the weekly option, the at the money straddle, so 535, was pricing at the 535, long call, long put, $40.65. That's what it was pricing as an actual expected move or the implied move. Now, is it possible that AMAT moves $40 overnight so that the person who buys this straddle simply breaks even? Sure it is. That's possible. But historically speaking, 75% of the time, stocks do not make the actual move based upon what the market makers were implying. So when USO spreads are super wide and volatility is inflated, they're defending their own book of business against people who want to buy USO options. Just like in AMAT, market makers are defending their book of business for people who want to buy AMAT straddles. And they say, okay, well, if you want to buy it, you're going to have to pay this much more for the options in order for us to take on that risk on our book of business.
Yep.
And so when you look at what actually happened, the stock moved. Now, we don't know where it's going to open tomorrow morning, but in the after hours, it moved $26. So if you were to look at what the market was implying, the market was implying a $40.65 move up or down on the at the money straddle. Divide that by where the stock closed today, 534.54. The market was implying a 7.5% move overnight on earnings. Well, what did the stock actually do? It's about $26 move from 534. Right now it's trading for about 509, so it's about a $26 move. Divide that by 534.54. The market only moved 4.8%. So whoever went out and thought I was going to buy that straddle for $40.65 and make a killing tomorrow when this thing makes more than a 7% move, or at least the implied move, they're getting crushed tomorrow morning. Right? And so I think, I know this wasn't a question, but it is, I think, grossly underestimated when there is a lot of news around stocks, around earnings, obviously with USO, with the US-Iran, tensions in Strait of Hormuz and all that kind of stuff being closed. When, market makers are not dumb and they're going to price options significantly higher for people who think they want to come in and buy these options and make some easy money on all this geopolitical risk or on this earnings news event. And they will grossly overprice these options. And sometimes that's just widening the spreads to discourage trading. And sometimes it's like, well, you want to trade them? Pay this. You can have as many as you want, right? And more times than not, this is the retail trader that pays the price.
The thing that I've seen on those straddles is that the better way to go, strangles is the better way to go, is to go a little further out in time. And it's a volatility play much more than a delta play, right? You're playing the volatility being sucked out of the positions so you're buying it the other way around. I'm sorry. You buy it way before earnings, and then you play the volatility crush up on the way into earnings. Increasing. So it's more of a Vega play. But in that case, you have to be directional at some level. You've got to have a directional bias. And so in that case, I'd rather do a call or put ratio back spread, which in the trading rooms, we do ratio back spreads. I've done that in my Tuesday morning sessions a number of times.
But if it's super high volatility and you're really close to expiration, that can be damaging too. In fact, the fact that 70 to 75% of these actual moves do not make the implied move, the option seller is actually in a better position to profit more frequently, selling not naked straddles and strangles, but iron butterflies and iron condors would be probably the higher probability trade. And
and the thing that I would just add is 60% of the time it works every time.
That's right. That is right. And
all right. Well, with that being said, let's go ahead and turn this thing down for the night.
I've been a little distracted for a second here because I'm going to show you the nerve of this guy right here on top of my chart. What are you doing? What are you doing?
Dude, the markets are flying.
Everybody wants to learn how to trade, even the flies. Couldn't resist.
All right. Well,
That's
I'm
the
gonna
sign, that's
log
the
this
sign.
thing out. Hey, listen, if you're not a Traders Army member, we invite you to come on board and be one. Promo code Trader60 get 60% off the first month. And we'd love to have you kind of join us. And do me a favor, tell your friends about this Thursday night session that we do every other week, and we'd love to have them join us. So
It'd be awesome.
all right, everybody. Peace
This is
out.
great, y'all.
Guys, have a great night.
Have a good evening.
Peace out, y'all. Y'all enjoy your night. Have a great weekend.